Welcome to Bro Billionaire. It's 18th of December 2022. We are almost reaching the year end and Nifty may not have a good news for us. As per the charts, we can see here, Nifty since 3 days has dropped. So we will do Nifty's analysis. We'll try to find out the levels for next week. Actually, this video will be a little bit longer. I'll try to finish it within 15 minutes. So for now, I would say that this video is very important. Don't miss all the details that I'm going to talk. If you are an Elliott Wave analyst, it will help you more to learn. And if you don't understand Elliott Wave, still you will get to know levels in very simple language. So the analysis that we are going to do is first with indicators and price action. It's a classical analysis that also we are going to check. After that, we'll check Elliott Wave, and at the end, we'll do the option chain analysis. And before that, we'll talk about what we discussed in a last week's analysis. So in last week, before last week on 7th December, this was our analysis that we will be moving like this. So first identification of the fall was around 7th December. Okay, after that, we expected a drop on the Nifty. So this level of 18,300 to 244, it has almost come here, but the structure has changed and it is looking more bearish now. We'll talk about that. Then we talked about this chart in last week. Okay, so not last week, but yeah, what's that week? Yeah, it was a last week actually. So in last week we discussed this chart, and there also we were coming up with these levels, and we were considering this as this as ABC correction completion and then a pullback to new high. Okay, so this was the criteria that we discussed. So anyhow, in these two charts we were expecting a move towards 18,300 to 250 zones. Another chart was more bearish approach with 1-2-1-2 formation like this, and even going beyond 18,200. Okay, so this has changed and I think we can delete it, and this is not looking right. Here wave one was like this, internal wave one of one took longer time, this two also took longer time, so this doesn't look well. So I think we can delete this one. Okay, so yeah, and this was more bearish approach where we assumed two completed here, but then we had some move here and like this, right? And then we have started the drop. So now we are going to check the price action and indicators. So price action and indicators, if you remember last week, we explained that Aron is turning down. It came below 70. Now it's near 50. And around red is also turning towards green line. So if they cross, then on that day, there will be a big fall. Okay. So after the big fall, only that will cross. And the cross means the drop is going to come, and the drop will be bigger. So you can see here, it crossed here, right? During this portion, it crossed during this red candle. I think it crossed. And after that, we had a drop. This was a smaller drop and then it turned sideways. Okay. So this market went sideways little here. Okay. And then it shot up. And when it shot up again, it gave crossover. So this is better than ADX. So that's why I'm using it. And yeah, here you can also notice that it turned bullish at this point, and from this point onwards we had a big rally. Okay, we had a big rally here. So similarly, Aron could turn negative here, and it's a bad signal for us. You can see here, right? It can turn like this. If it goes to the extreme, so red line goes to 70, green line goes to 30, then it will be very bad situation for us. Okay, and apart from that, we also talked that Nifty could pull back towards 13 EMA and then drop, okay, towards 48 EMA. So this yellow line is 48 EMA, this white line is 100 EMA, and this pink line is 200 EMA. So I'm suspecting Nifty is dropping towards this 200 EMA, and this is a blue arrow is 13 EMA. So this is short-term moving averages, 13 EMA and 48 EMA, 100 and 200 are long-term moving averages. So most likely we are dropping towards 200 EMA, and yeah, this might come towards 17,500 if we drop. Even if we drop fast, it can come towards this. Then it can take support, bounce a little, and can again one more time it can go below 200 EMA. That's what I'm sensing here, you can see here these three candles. You know the pattern. Let me know in the comments what pattern it is called. 3 days red candle, when it is formed, what type of pattern it is called. It's not exact textbook example, but still every day it's closing below the previous close. Okay, so that's why it's a 3 closing on the downside. So let me know in the comments what pattern it is called. And yeah, let's move forward. So as I said here, there is a support near uh, what is this level, 18,000. Okay, and RSI is below 50. RSI below 50 is considered as a bearish signal. So it crossed from 70 and it's currently looking to be 44.47. So yeah, you may not be able to see it if the clarity is not there, but yeah, so it's at 44.47. So this is considered as a bearish signal, start of the fall. And yeah, it can reach to 30 or even go below 30 and become the oversold situation. So the support that we have right now is near 18,100 to 18,000. If it is not able to sustain that support, means it will close below 48 EMA, then the 100 EMA will activate. If it closes below this 100 EMA, then 200 EMA will be acting as a support. So we have to consider these as a steps. And yeah, most likely, as per my other analysis of Elliott Wave, we are dropping towards 200 EMA. So that is a bold statement. We'll see why we are saying that. So let's check the Elliott Wave analysis. So first thing, on Elliott Wave, we will discuss the long-term chart, or you could say the chart from COVID low. We discussed this chart in a previous videos as well. I will not waste much time. It's there on your screen. We are assuming this as a complete one wave sequence and this as wave 2 sequence. Possibly wave 2 has completed here. Hope it's not the other way around, and it's not on some kind of expanded flat correction. We broken this high of 18,600. So hope wave 2 is finished here. Here there we see a negative divergence between MACD on and price on a daily time frame. So this is daily time frame video, 1 day chart. And yeah, so here there is a probability that we are forming 1 2 here, then 3 4 5, we are heading higher. We discussed on long-term targets. You can watch that video. Link will pop up above. We discussed around Diwali or something. We discussed how much we are going to go up if we break 18,600, right? You can watch that video. So this is the way we are assuming that this completed one wave sequence here, wave 1 completed here, and currently we are in wave 2 with expanded flat correction, possibility to break 16,700, and 16,700 to 16,500 is a possibility as per this pattern. Then we'll have a sharp rally as a third wave, fourth will consolidate, and fifth will go up. So this third wave, it's very good to enter this, and like it's very powerful wave, third wave. So I'll be waiting for that, and I'm looking forward to this analysis. So let's decode this chart further. We'll talk about more on this portion and see what's happening. Here we can say here that this wave is leading diagonal pattern, wave 1 with 3 wave structure. This is 2 3 4 and fifth here, fifth finished here, fifth finished at 18,096. So remember this number. Okay, this is important support as well. And then we had this wave down, not sharp rally, it's a rally but corrective rally, bear market rally you can call. And we completed here ABC sequence with this is as a 3 wave structure. So this portion is very important as far as Elliott waves concerned, and Elliott wave analyst must pay attention to 3 wave rally as a wave. Okay, instead of labeling it as a impulse structure, you will most likely go wrong here. And I'm gaining confidence now that my view of this particular move was right. I went wrong here, by the way, and previously I was able to identify this rally from here as well, that is going to fail, rally from here as well, that is going to fail, based on same fact that it was making three waves going on the upside. Here it tricked me. There was another pattern, leading diagonal pattern, which is a 3 wave structure. So here it tricked me. I could not project that it would break this previous swing of 18,115. So anyways, as I said in previous videos as well, so such mistakes can happen and we learn from these videos. And we also mentioned in previous videos that even if it breaks 18,600, I will not look for buying aggressively after breaking of this. I will wait for the pullback. And now is the time for that pullback. That's what analysis is saying for me as per the Elliott wave is concerned. So yeah, you have to judge on your own. You have to decide on your own. You are the owner of your assets. So don't take my analysis extremely seriously. You have to judge you should have your own judgment. You need to consult your financial advisor and then take the decisions. So let's move forward and see what's the next chart. What's the next wave says here. So as I said, two wave will complete here. Then we'll have third wave breaking the all-time high, fourth, fifth, like that. We can go all the way up. Okay, so fundamentally or economically, microeconomically, you can study on your own if we can rally further beyond 19,000. And yeah, you can think on that part as well, right? You need to check macroeconomics and fundamentals of our country. That will decide the next move of the Nifty. So moving further, decoding this move of wave 2. Here it's a wave A, 3-wave structure. Here it's a B wave, which is a 3-wave structure, this B wave, okay, which is a 3-wave structure, and then we'll have a 5-wave going down as wave C. So this is impulse C wave, which is a 5-wave sequence coming on the downside. Okay, so this is how we are expecting. Then we'll have 1, 2, 3, 4, 5. This will complete third wave here, somewhere here, and then we'll have fourth wave. Then we'll have 5-wave going up as a 5th wave. So like that we'll move. Hope this first chart is very clear. Now, when I go further down, okay, so let's check this portion. Let's check this portion. In this portion, I'm considering this wave as a wave 1, right? And this as a wave 2, okay? And we already talked about this particular move. I don't want to waste much time here. And yeah, in the next session, we should see a pullback and then a drop should come. We'll talk about that in more detail. So when this chart will get activated, so the first chart will be activated if we break below 18,000. So let's see if we break below that 18,000 close below this. I will consider that 17,800 is a minimum expected level as per me. Third wave will go usually beyond this, and in case of extension, I'm expecting it to reach to 2.600 Fibonacci, which is coming around 17,300. So third wave should reach beyond this. If it does not cross this level, then I will assume that it is going to go higher and there will be a different case to be considered. So here 18,000, if it breaks below 18,000, this case probability will increase that we are going towards 17,300, and 17,400 is a major support. You need to watch for that support as well. So yeah, this was the first case. I'm giving this first case of expanded flat as a 80% probability. Okay, so you can let me know in the comments what do you think. And as I said, based on this 3-wave structure that has formed here in a wave. So let me show you on the chart. So you cannot label this as an impulse structure. If you are labeling it, I don't know how you can label it. You can either label it 1 2 1 2. That also I don't like here. And yeah, it's most likely the flat correction, kind of flat correction, A, B, C. Okay, so this is how I'm labeling this as a wave, and this is like giving me the confidence to consider this as an expanded flat correction. Moving further to the second probability of leading diagonal pattern in a wave 1. So this can be wave 1, 2, okay, 3, 4, 5. I went beyond 18,000 here, but yeah, I expect it not to go reach there. I don't expect it to reach there. It will just break the top of this wave 1, okay, and make a leading diagonal pattern like this. It will make pattern like this, okay. If it has to happen, the fourth will finish just below this, maybe near 18,000 or 17,900. It will finish. and we'll have a bounce back on the upside. It will make one more top, maybe near 19,000 or 19,300. Okay, maybe near that, this trend line, it may make a new top, and then we'll have ABC correction. So this case is boring case, you could say, and this ABC correction will consume a lot of time. Probably by June end, if this has to happen, then it may span another 6 months going down. And yeah, I don't know where it'll go. It can go even beyond 16,500 after making one more top. So we don't know that. And yeah, I'll give this a 20% probability because of the move that I see at the start of this trend. So next chart is similar thing. Here we are assuming that wave 1 finished here, right? 2 finished here, 3 finished here. Okay, with 1, 2, 3, 4, and 5. Now fourth will finish here, and this can be a double zigzag correction with W wave completed here, X wave completed here, A, B, and wave C reaching towards 18,000 to 17,900 max. It should not close below 18,000. So it's allowed to break 18,000. What will do is it will break 18,000. It will go towards 17,900, and on the same day it will close above 18,000. So that can happen. If that something like that happens, then be careful that this case chances will increase in that case. Okay, we'll talk about that in a next week maybe. Okay, so yeah, and to consider the fifth wave, I will have to wait for break of 18,700. So this is now the important swing for us on the upside. So yeah, unless this is not broken, I will not consider the bullish view. There are two gaps left also while coming down. So this level is important for me, and it should come like this on the upside. If it breaks this, then I'll consider that one more top is pending like this. Okay, and then we can have ABC correction on the downside. So temporary view, temporary market view is negative for me. And yeah, as I expected, as I said, we should be looking for more bearish approach. So what is going to happen in the next session? Let's discuss the next session as well. So here we see 1-2 pattern, and this can be again 1-2 pattern. And here A wave is completed and B wave has broken below 18,270. So this can be expanded flat correction. So in next session, what I'm expecting is Nifty to either open flat, make one more smaller low near 18,200 or something. Okay, even 18,200 is looking less possible. It can open small gap down, but not too much gap down. If it opens too much gap down, then I'll not be considering this as a proper expanded flat correction. Okay, so yeah, so what I'm expecting is to open either small gap down and then start the pullback going up like this towards 18,411. So it will just break this. So 18,411 to 450 is the level that I'm expecting it to reach on the pullback. It can even open gap up. If it opens gap up, then this case has more probability to reach towards 18,400 to 411. So from here, I'm expecting a resistance to be faced. Here you can notice this area is acting as a support. Sorry, now it will act as a resistance. Previously, it was acting as a support. So the roles has been switched. So this is A wave, this is B wave, and C wave will head higher. It can either open gap up, even gap up. It can open near 18,400. So global markets have closed little negative. They recovered from lows, but still we can still open small gap up and then head higher. And then by the end of, let's say, 130 or 230, we should start the dip. In last 1 hour or so, we should have an aggressive selling, breaking the low. Okay, again, and on Tuesday maybe we'll open gap down. Tuesday, Wednesday, even like Tuesday, Wednesday, it can be gap down. Thursday, even a small gap down, and then recovery can be possible due to the expiry. So next 3-4 sessions should be important for us. And yeah, let's see if our view materializes in this. So in next week itself, we should finish the third wave that I'm expecting. There are 5 sessions in next week, so we should finish that. And yeah, the next week, or you could say the week of last expiry should be a consolidation, and then in first 2 weeks of Jan, we should complete the correction. So by the end of first half of the January, we should complete the correction, and in the later half of January, we should start the fresh rally. So this is how I'm expecting, and this is what my analysis says. So do hit the subscribe button, do hit the like button if you like the analysis. We will move forward and check the option chain now. So I clarified all the doubts. Hope I'm clear. Break and close below 18,000 on a day will make bears more active, and we should head aggressively towards 17,300. That's what the first point of this video. And yeah, if it does not close below 18,000 in next week, then expect this bearish analysis is going wrong, and we have to wait for then 18,700 break to confirm the further new high to be made near 19,000. So these are the only 2 points that I had to tell you in last 10 minutes. Okay, now on the option chain front, we can see here on option chain, you can see here 18,600 as a major resistance. So obviously this will be major resistance. We talked about this in a last week as well. This was the previous all-time high near 18,604. So obviously this will become resistance. Sellers are considering this level to be not to coming in this expiry of 22nd December. So that's why we have highest call open interest here. Okay, this is the biggest number. So that's what we said, that sellers are not expecting this to be broken. After this, we have 18,400, but yeah. So again, you can see here, aggressive selling happened in a last session. 1,000% jump means it was almost just 4 lakh call open interest. Okay, call open interest are acting as a resistance. It was just 4 lakh, and on last Friday, it jumped 1,000 points, or you could say 40 lakh fresh sellers entered this strike, like shorted this call. Okay, and they are expecting it to be more aggressive drop on the downside. So this is what the option chain telling us. At a glance, when you check this particular number, it's very big. So the number is big in terms of percentage. Here you can see these numbers would have been added more. Okay, so more sellers would have entered at 18,400. This is 200% jump. This was already, you could say, what would be, it could be 35 something. Okay, and this could be 4 something. Okay, so from 4 to 40 it jumped, from 35 to 75 it might have jumped. Okay, that's why, yeah. So already it was 18,400 was a bigger resistance. So on the support side, so put open interest acts as a support. So on the put side, you can see here, this was a major support. Okay, so this was a major support. It has been broken now, and now the next support lies near 18,000. Okay, right? So this is the number here. On this side, you see a bigger number as 54.8 lakhs, almost 55 lakhs. So no number is near that. So 18,000 is a key resistance, key support. We talked about importance of 18,000 as well. So we don't want closing below this if the bulls want to continue going higher. So if this closes below this, then the next number is after this, you can see 17,500. So I did my all studies, and I have came up with this analysis. So rest be sure that this is what the option chain path tells us, that if we break 18,300 in next session again, then like if we close below this, it's going to go here. Okay, if this is again broken, we are going towards 18,000. So sorry, 17,500. So this is what the option chain path tells us for next week's expiry. So monthly expiry, we can see a different picture, but there will not be much of liquidity or volatility in that expiry. So it's better to consider this data as a primary data. So here option chain tells us that 18,600 to 18,000 is a major range for this expiry. break of 18,000 will activate 17,500 as a next level. Okay, there is a level 17,800 as well, but the number is very less here. It might have some accumulation here, and we may expire between 17,800 and 18,000, and probably in next expiry we would drop towards 17,500. That is also a possibility there. So hope you like the analysis. This was a complete bearish view considering the 3-day continuous selling, 2 open gaps, and like we broken 13 EMA, and Aron is also going towards, like red line is going to cross green line and red line is going to go up. So these things indicate that things are not going to be good for next 30 days or so. So yeah, be careful. Do hit the like button, subscribe if you haven't already subscribed, and keep spreading the love. Thanks for watching. Bye bye.